There will be a drift here. You will notice that I will ask each panelist something about their fund and then what they think about and recommendations for investing in Africa. So the next person I will talk to is John. And John, would you tell us a little about TIAA-CREF and then your criteria and requirements for potentially increasing your allocation to Africa?
Well, thanks, Raphael, and thanks to African Investor for having me. And so if you give me maybe 30 seconds to just do the TIAA-CREF plug here and introduce you if you're not familiar with the firm. So TIAA-CREF is a global financial services firm. We have close to $900 billion in assets through not only TIAA-CREF Asset Management, which is where I work, which is about $630 billion, but also our affiliates Nuveen as well as Henderson Real Estate. So turning it to TIAA-CREF Asset Management, where we're very performance focused. We manage not only general account money, which is for our 5 million plus participants, offering them retirement solutions and retirement income, but also we have a funds business where 75% of our funds are ranked 4 and 5 star by Morningstar, and for the last 3 years we've been awarded the Lipper Award for best large fund family. So turning to Africa and where I fit into all of this. I head our emerging markets fixed income research team. Our EM assets under management is about 10 billion, and we invest globally in EM across local currency markets, sovereign markets in US dollar, as well as EM corporates. In terms of our Africa focus, first I want to highlight that in terms of our funds and our emerging market debt mutual fund, 10% of the index that we're benchmarked to is in Africa, and this is across Africa. South Africa is the largest country in that, but the index itself has about 60 countries and many countries in Africa. Compare that to where we were 5 years ago, where Africa was 5% of the index, the MB Global Diversified. It may not seem like a lot, but we're talking about total benchmark assets globally, at least the ones that are benchmarked and recorded by various banks like JP Morgan to be 300 billion. So 10 billion, 10% out of that is quite a large number. 5 years ago, Latin America was at 40% of the index. It's now closer to 35%. The Middle East has stayed stagnant, actually has fallen. It's at 4%. And even Asia, where we've seen an explosion in Asian debt capital markets, it still stayed flat in the last 5 years at 20%. So what does this mean for us and our team? What it means is that there is a greater opportunity set to invest in. Now, the challenges are that are many, and if you've been watching the news and following Africa closely, as I presume most everyone here is, we're facing various both structural and cyclical headwinds that our team is managing through, and the risks not only stem from commodity prices, where a lot of our countries in Africa are obviously commodity exporters, but we're also facing pretty sizable fiscal headwinds as well, where countries are having to many countries in Africa that we invest in are having to navigate twin deficits, fiscal deficits, and current account deficits. Mind you, there are obviously the other structural risks that we have to deal with and understand from institutions that are still pretty nascent. They're improving, their policy-making credibility, but there's still, quite a ways to go, as well as challenges in terms of liquidity. As most of you have been focusing on here, African currencies have been facing a tough time, and we have liquidity challenges not only from a convertibility standpoint, a trading standpoint, but also hedging limitations. So we have to manage through that. So that's kind of the risk side of the equation. To be a little bit more balanced, what are the opportunities? And the opportunities are certainly great. I mean, you have some key structural drivers, whether it be demographic, whether it be infrastructure needs that should hopefully be funded and fuel growth over the medium term, and provide, for investment, opportunities, but also the fact that because there are challenges to understanding, and by the way, I think our research team, we have a very deep fundamental research bench, which does a fantastic job, but nonetheless, even having that expertise and sending our folks to kick the tires, as I'm going to, pretty soon, even having that, there are challenges over data quality, over governance in investing in certain corporates, so those challenges afford institutions like ourselves and asset managers like ourselves that have invested in a team, and an active team, to be able to identify maybe mispriced, misvalued, opportunities, and contribute to, to greater alpha generating, capacity. So maybe we'll stop there and pass it to Raphael.
Yeah. Well, thank you, Nick.
Doing business in Africa. You can't afford to be without Africa Investor.